Good morning, people. This is your friend Juan Gracia, the freelance bookkeeper here in RGB. Um, I wanted to give a quick explanation of what the income statement or the profit and loss statement is. Um, Usually, this report you're going to receive it by your bookkeeper or accountant, and you're going to try to read it. And maybe it's a little bit more complex depending on the type of industry that you're in. If you're in insurance and construction or a medical practice, it's going to be a little bit different. But in summary, this is the categories that you're going to see in an income statement, or you can break any income statement or profit and loss statement into this. So first, at the top, we're gonna have our revenue from the core business operations. All right. You have other types of revenue, such as interest that you earn in a interest-bearing account. You're gonna have maybe the sale of some old equipment that you did. You're gonna have other types of income, or maybe an employee paying back a loan to the company. You're gonna have other types of income, but those are not uh, a product of your core business operations. So they're not gonna be included here. This is only merely for your core business operations. If you're selling physical products, it's gonna be the sale of those products. If you're selling a service, it's going to be the sale of those services. Um, so it's the core business operations, all of the sales. Then we're going to have the cost of goods sold or the direct expenses. And I think the name is very self explanatory, this direct expenses. Everything that is strictly related and you can identify it in the end product that you're selling. That is a direct expense. If you are a service based company, the direct expenses or cost of goods sold is going to be mainly your equipment, your rent, and well, maybe the rent. No, the rent is an indirect expense. It's going to be mainly payroll, probably. Payroll is going to be your biggest expense if you are a service based company, such as an accounting practice, a law firm, an advisor, consultant. It's mainly going to be payroll. But if you're selling a physical product, it's going to be your inventory. All of your inventory, whether you produce it, so all the three stages of production, which is raw materials, products and process, and the end product. It's going to be here. And then you're up to your gross profit, basically how much money we made from our core business operations and how much money we spent on our core business operations. And we have like the gross profit. Then we're going to go down and we're going to go to the indirect expenses or your overhead. If you are in the construction industry, you're pretty familiar with the overhead rate and these expenses that maybe you don't intend to include on your. If you don't take them into account in your job costing, they're gonna eat your profits. So, what are their indirect expenses? Indirect expenses is usually going to be rent, utilities, marketing, professional fees such as CPA fees, legal fees, this type of services that are necessary for the company to operate, um, but are not necessarily identifiable. You cannot necessarily see them clearly on the end product, but they're still necessary for the business to operate. In other industries, like in the construction and when you sell physical goods, like when you have inventory, payroll is going to be here, which is also the reason why we sometimes see this line item as selling general and administrative, like administrative, your payroll, your admin staff, your back office, selling, well, your marketing, and all those efforts to fill your pipeline. Yeah, it's going to be here on indirect expenses, and of course the office and having if you're renting a place, you're paying debt or mortgage on your office and your warehouse, it's going to be here. And if we subtract now, we already subtracted the direct expenses, and we're going to subtract now the indirect expenses. What we're going to be left with is your operating income, or what finance guys on Bloomberg like to call EBITDA or EBIT. Um, oh yeah, you're usually going to have, depending on your industry, if you are in the construction industry, or the real estate industry, you're probably going to have depreciation and amortization on your direct expenses or cost of goods sold. If you are not on those industries, you are a service-based industry or you sell something like inventory, you're probably going to have depreciation and amortization as an indirect expense. That's an interesting thing that we had to review. And this gets more complicated in other industries, but for now, let's stay there. Now you have your operating income. You subtract your direct expenses and indirect expenses, and basically, this is how much money you make from operating your business or how much money you're losing. And after that, we have things that are not like you have to pay them, but they are not as strictly related to running your business, or you can see them as plus or an extra, which is the debt repayment and your taxes. These are not neither direct or indirect. They're just something else. Plus of having a business. You can see them as a good thing or a bad thing depending on your view. But that's the last thing, and also any other type of income or expense. Like I mentioned it before, revenue from core business operations, you're not going to include the sale of equipment unless you're Caterpillar and you're selling equipment. Um, but if you sold an old car, a desk, a computer, all of that type of extra income, or if you receive dividends or something from another subsidiary that is not your cost business operation, your core business operation, sorry, is going to be here at that type of as it's going to be here as other income line item. And after subtracting that, that's pretty much all of our income and expenses. We're going to have the net income. What you see here, these percentages, it's the margins. It's dividing the gross profit by the revenue from core business operations. So you're going to get this margin, which tells you of every dollar that you make, your gross profit it's 40 cents of each dollar that you make in revenue, and your operating income again it's a percentage of sales of your core business revenue. So you get to see, okay, my operating income after direct and indirect expenses tends to be or is going to be 16 cents for every dollar of revenue, and your net income is after taxes and debt repayment, and you're going to be, oh, okay, for every dollar I get to keep 6 cents, so I have to make this much to make this much net income. And you can work with projections and set goals and KPIs after, and you can become very strategized. You can write a strategy for growth, for expansion, for profitability with those numbers, and it is something that is really fun to do, and it gives you a goal looking forward instead of just trying to make more money for the sake of making more money. Okay, so hopefully this was the income statement and or profit and loss statement. I hate that name. I'm not sure why QuickBooks calls it that way. I prefer income statement. But yeah, this was a quick explanation of the income statement. If you have any questions, you can write them down in the comment section. I'll be very active trying to respond to them.